watching Business Television India.
Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I am Muralidhar Swaminathan. Joining me on the show is Gajendra Kothari, who is a fund advisor, financial advisor. Gajendra, welcome to the show. Thanks for joining us. And I think mutual funds are doing roaring business, as is seen in the HDFC AMC listing.
Right.
Why is this business so simple and so profitable? What is your thought on that?
No, in fact, this is one of the best businesses to have around. You know, once you've proven your credibility, though it takes time to establish your reputation, but once you've crossed that bridge, in the long term, this plays off very well. Because in India, the penetration of mutual funds is pretty low, as we have seen.
Right.
It's only barely 2%. And after this campaign, Mutual Fund Sahi Hai and demonetization, a lot of investors are now moving towards financial assets.
Right.
And if we compare ourselves to other nations, the developed nations, we are barely 10-11% of our investments, mutual fund investments are a part of GDP.
Right.
Whereas in UK, US, it's upwards of 100%. So you can imagine the sky is the limit.
So as they grow, the profitability aspect, is it the margins will be what kind of margins?
So margins, of course, as you become bigger in size, as the funds become bigger in size, margins will come down, as happens in other industries.
Sure.
Volumes go up.
Volumes go up.
Price come down. But the beauty of this industry, Mr. Murli, is that there are no capex here. You know,
Right.
you don't have to establish plants and offices. There's no
Yeah.
borrowing required. You can generate a good amount of free cash flows, and there's no bad debts.
And the risks are also limited. No bad debts, no balance sheet problem.
No balance sheet problems at all.
Right.
So that's the beauty. So it's a full operating leverage game wherein, you know, so suppose right now you're managing 3 lakh crores.
Right.
And tomorrow if you manage 6 lakh crores, your cost doesn't go up simultaneously to that extent, you know.
Correct.
So it's a beautiful business to have. And that's why
it's better than life insurance, I suppose.
It's much better than life insurance. Because in life insurance, you know, we've seen companies take 15-20 years to become profitable. Right. And many companies have to exit because, you know, it's a complete cash burn business in the initial phases. Mutual funds is not.
Right.
So I think you can see a lot of AMCs in the near future planning to get listed in another 12 to 18 months.
Right. So mutual fund business is very interesting with today's listing of HDFC AMC, which is the asset management company managing the HDFC mutual fund. The stock listed at 60-65% premium, and it's trading at a valuation of about 50 times to its current market price. On that note, let's go across to our first caller. Gajendra Prasad is on the line from Gwalior. Good afternoon, Gajendra Prasad. What's your query?
हाँ, मेरा म्यूचुअल फंड टाटा के म्यूचुअल फंड पे पूछना था कि टाटा म्यूचुअल फंड में इन्वेस्ट करना चाहता हूँ 5 साल के लिए।
हाँ जी।
और मैंने ये से टाटा इक्विटी पीएफ फंड रेगुलर ग्रोथ लिया हुआ, वो कैसा है? बस 2 ही क्वेश्चन है।
ठीक है, गजेंद्र आप बताइए।
बिल्कुल राजेंद्र जी, मैं आपसे खाली ये जानना चाहता कि आप सिर्फ टाटा म्यूचुअल फंड स्पेसिफिकली क्यों निवेश करना चाहते हैं, और जब आप कहते हैं कि टाटा म्यूचुअल फंड, तो टाटा म्यूचुअल फंड में भी 20-25 फंड्स होते हैं, इक्विटी, डेट, हाइब्रिड। तो उसमें से आपने अभी एक फंड का नाम लिया टाटा इक्विटी फंड। तो टाटा इक्विटी फंड ये प्योर इक्विटी फंड है, यानी आप एग्रेसिव इन्वेस्टर हैं, लॉन्ग टर्म के लिए कर सकते हैं, कम से कम 5-7 साल के लिए, तो ही ये फंड में निवेश करना बनता है, क्योंकि इस फंड में रिस्क है। कई बार होता है इक्विटी मार्केट, जैसे हमने देखा इस साल इंडेक्स चला है, लेकिन फंड्स के परफॉर्मेंस सबड्यूड हैं, उन्होंने इतना रिटर्न्स नहीं दिया है।
करेक्ट।
तो आपको 2 साल 3 साल उसमें होल्ड करना पड़ेगा। रिटर्न्स काफ़ी लंपी होते हैं, लीनियर नहीं होते हैं। अगर आप 5 साल इन्वेस्टमेंट रह सकते हैं तो आप 10-12% का रिटर्न एक्सपेक्ट कर सकते हैं। कुछ फंड्स मैं रेकमेंड करना चाहूँगा, अगर आप टाटा में ही निवेश करना चाहते हैं। मीडियम रिस्क अगर आप ले सकते हैं, जहाँ 65% इक्विटी है, 35% डेट है, तो आप टाटा हाइब्रिड इक्विटी फंड ले सकते हैं। और लार्ज एंड मिड कैप में आप चाहें तो टाटा लार्ज एंड मिड कैप ले सकते हैं। और जो फंड आपने भी बताया वो भी काफ़ी अच्छा फंड है, बट आपको कम से कम 5 साल का होराइजन रखना पड़ेगा राजेंद्र जी।
5 साल का होराइजन, 5 साल तक इन्वेस्ट करके रहना इम्पॉर्टेंट है। लेट्स गो टू B.S. Nayak from Mangalore has made his query. He is 43 years and wants to accumulate 2 crore at the age of 50. 7 years में he wants to accumulate 2 crores. He is asking how much he should invest in mutual funds.
Correct. Mr. Nayak, you know, so you are 43, so it may, and because you want to achieve this goal at 50,
yeah.
I guess you've started quite late in this game, you know, and this investing game is all about starting early. Now that you want to achieve 2 crores in 7 years, you'll have to invest 1,50,000 per month in the form of SIP. and assuming you earn 12% return, you will get to the 2 crore figure. Suppose if you're not able to start with 1.5 lakh because this is really a big amount, then you can start with something called step-up SIP, wherein you start small and then every year you increase it by 10%, you know. In that case, Mr. Naik, you have to start with 1,20,000 SIP per month and then you step up by 10% every year. As far as the funds are concerned, I would recommend you to go with a diversified equity funds because this category of funds will be able to give 12%. So you can choose from any of these funds, you know, Parag Parikh Long-Term Equity Fund, UTI Equity Fund, Motilal Oswal Multicap 35 Fund. These are all diversified equity funds. You can invest in all three also, 50,000 three funds, and remain invested for the next 7 years because there will be a lot of ups and downs.
Right.
But if you stay hold, I'm sure you'll be able to achieve your goal.
Okay. Let's go to the next caller. Nikhil Surve is on the line from Mumbai. Good afternoon, Nikhil. How are you?
Good afternoon. I'm fine. How are you guys?
Yeah. Thank you.
Yeah,
Yeah.
okay.
Go ahead with your question.
My query is first of all of SIP.
Okay.
I'm investing 5,000 respectively in Mirai Asset, Emerging Blue Chip, and SBI Magnum.
Okay.
So Mirai Asset is giving me returns of 14%. Okay,
Right.
on average, and SBI is almost 2%. So I'm not happy with SBI. Do I need to switch from SBI to any other fund? That's my first query.
Yeah.
Okay. Second query is I've invested Access long-term equity in mutual fund. I've bought I've invested 3,50,000. My returns are like 21%.
Right.
And then Mirai tax saver fund I have invested almost 6 lakhs. The returns are 18% on average. Then SDFC 1.5 lakh, 9.5 returns percentage. And L&T value fund 2 lakhs. The returns are 7.12. The last two, HDFC and L&T, are the returns good, or I need to stick to it, or need to switch to other fund which can give me high returns? Okay. That's the second query. The third query is I want to invest 20 lakhs. Okay. And I want to double up that money. Okay, in the period of 4-5 years or so. So which are the best mutual fund you can suggest me?
Okay, Nikhil, I think you have raised some important questions, and so let me try to answer one by one. See, with regard to funds in your portfolio, you mentioned 5-6 funds.
Yeah.
Always remember, Nikhil, your mutual fund portfolio is like a cricket team. Never always you won't see all batsmen scoring in every match. A century. There will be some batsmen which will score 0, some will score 20, and some will score 100. At the end of the day, the idea is to see whether your team has won the match or not, right? Rather than seeing which individual batsman has been performing. So, in the same, as far as your portfolio is concerned, if your overall portfolio is able to give you somewhere between 12 to 15% return over a long term, I think you have done pretty well. Always remember, not all your funds will fire every year. Some funds will see overperformance, some fund will see underperformance. The fund managers are good, but even the best fund manager in the world, which we all consider Warren Buffett, in his last 65 years of his career, he has underperformed 1/3 of the time. So you can imagine if that can happen to him, we are all lesser mortals, So I would rather suggest to remain invested in the funds which you just mentioned. These are all very good funds with a long-term track record. And don't panic. You will see 1, 2, 3 years of underperformance, but eventually they will catch up. Now, as far as your goal of 20 lakh investment is concerned to invest in mutual funds, you're expecting around in 5 years you want to double. So, Mr. Nikhil, in 5 years to double, you need to achieve 15% growth rate. Okay. Now, this may be possible, may not be possible, but as financial advisors, we think this is a little aggressive side. So, rather than 5 years, you should have a 6 to 7 years horizon. And right now, because the markets are elevated right now, they are overvalued in our opinion by 20%. So there may be possibility that next 2 years, it may not give much returns. So the ideal way to invest this lump sum amount would be to go through the STP route, Systematic Transfer Plan, where you invest 1 lakh rupees per month for 20 months. If the market falls in the near future, 3 to 6 months, then you can switch lump sum from liquid to equity, at lower levels. So that would be the strategy, but don't add more new funds even for this 20 lakh. Your existing funds are good enough. You can top it up in the same funds.
Right. With that, let's take the next query from Chennai. This is KS Aravind. He has mailed us this query. He is asking for a suggestion to invest in a good mutual fund through SIP for a period of 15 years. His target is 15 years. He is asking for good mutual fund.
Right.
We don't know whether he is willing to take risk or not. I guess you may want to suggest a balanced fund, or because it's 15 years, we don't know his age group.
Correct. So, Mr. Arvind, just to tell you something, there's nothing called a good or bad mutual fund. Some mutual funds are good, maybe good for you, may not be good for me.
What he means is good in terms of returns.
Right.
Right. He is expecting good returns.
Okay.
I think given a 15-year time horizon, that's the only information we have.
So I think, Mr. Murli, for 15 years, ideal way to go for is a diversified equity fund.
Right.
Because, a diversified equity fund has all sectors.
With multi-cap.
Multi-cap,
Okay.
precisely. Now, as you rightly said, if he's a little conservative investor, then he can go for balanced kind of funds, hybrid equity funds. So in hybrid equity funds, one can expect around 10% return over 15 years, and a diversified equity fund can give you 2 to 3% extra.
Right.
So, Mr. Arvind, the only thing you need to remember is these returns will not be linear. You'll have many years of underperformance, many years of outperformance. You need to continue with the SIP. And now what will happen, Mr. Murli, which many investors are not understanding right now, since the markets are high.
Yeah.
Okay, even if you start the SIP, and though we as advisors we say SIP is forever, evergreen product, but if you're starting today, it may so happen that next 2-3 years you may not see any returns in SIP, because your SIP may come down, and then again if the markets go down, that is when you will get
the average is better.
Yes. So investors will have to realize that if they are starting SIPs now, for first 2-3 years they may not see any returns, so they may sometimes see negative returns, as we have seen in the last 1 year.
Exactly. Yeah.
They'll have to wait for a full cycle to see the benefit of SIP and expect 12 to 13% returns over 5 to 7 years. So if it is a 15-year goal, Mr. Arvind, remain invested. Don't panic if your funds, or if you're not getting returns for the first 2-3 years. If you go through the whole cycle, I'm sure you will be able to achieve what you want.
Right. This is a very important observation, Gajendra, you made. Many people think that they can invest in mutual fund and make money.
Yes.
See, that's an aspiration, and the expectation has changed over the last 2 to 3 years. There is this general expectation that if I invest today, in 5 years my money will double, which is not the case. I would like to warn our viewers and investors is that be careful when you are looking at mutual funds. Don't expect overnight returns. For those people who invested during 2017, for example, they were getting a higher side of the cost as the market was rising continuously. So if somebody had invested in the peak, let's say between December, January, February, your costs would have been high and you would get disappointed. That is if you look at the short term. I assume those who invest consistently over a period of 3 years would be able to capture both sides of the cycle and then hold it for at least another 3 to 4 years to realize the returns. Don't expect huge returns, expect returns which are better than let's say a fixed deposit. So you should be very clear in your mind, these are not lotteries. These are disciplined investments over a period of time. Okay, on so that, you want to add something?
I want to add, this is a very important point, pertinent point, because we are getting a lot of viewers, these days investing into mutual funds. I would like to remind you, most investors invest seeing the past performance.
Exactly.
Last 2 years, 3 years has given wonderful returns, so they will invest accordingly. Even they think SIP is a sure shot way to make money. You will not go wrong in SIPs. But Peter Lynch has once said, most of my investors don't make money because they would come after 3-4 quarters of good performance, and they would leave after 3-4 quarters of bad performance.
Right.
So if you have come to mutual funds, and particularly through SIP, you have to ride the full cycle of 5-6 years. Then you will see an average return of 12 to 13% playing out.
Right.
So
Amit Vishwakarma is on the line from Ranchi. Good afternoon, Amit. What's your query?
Yeah, good afternoon, sir. So my query is somewhat related to what you were discussing. Actually, I have 1.5 lakh to 2 lakh of corpus, which I want to put in mutual funds, and I would be needing that 1.5 years later, 1 to 1.5 years later.
Okay.
So, I am just thinking whether to put in SIPs or should I go for secured investments like FDs and other secured options.
Right.
Yes. Amit, since you mentioned that you want to earn fixed returns, please remember only fixed deposits can give you fixed returns. No mutual funds can give you fixed returns. Mutual funds by definition, they are a vehicle, pass-through vehicle. So they are subject to market risk. Even if you're investing in debt funds or liquid funds, they are subject to market risk. But yes, if you can take slight risk, and if you want to earn a little better return than fixed deposits, and since your time horizon is only 1 year, we can only recommend you short-term debt funds. Okay, we can't recommend you equity funds. You can invest through SIPs in debt funds, but equity funds are complete no-no for you. So I would recommend you can select funds like UTI Short-Term Income Fund, Franklin India Short-Term Income Plan, or Kotak Bond Fund, Kotak Bond Short-Term Plan, where these funds, your horizon is 1 year and you can expect around 8 quarter kind of return, maybe 2 percentage points higher than 1 to 2 percentage points higher than the fixed deposit.
Is there an interest rate fluctuation risk?
Slight, not much, but there is some amount of interest rate fluctuation.
When bond yields change. And
exactly. But because we are now investing at a higher bond yields,
which means that lower prices.
Yeah. So if in
the NAVs are low.
Yes, exactly. The NAVs are low. So if you invest right now, over a 1 year period, if the yields fall, your NAV would go up.
Right.
And you are investing at a higher bond yield, which means you are getting higher coupon today.
Correct.
So that's why I said you can expect around 8% return.
Right.
Which is very comfortable,
yeah,
beating FD by
1.5
to 2%, yes.
Right. On that note, I think we are running out of time. Gajendra, thanks so much for joining us and patiently answering all the queries. With that, it's a wrap on this edition of the Mutual Fund Guide. Stay tuned to BTVI for more news and updates on the other side of the break.